people already introduced, and just let you know that all the panelists are on the call, and we are ready to start. Maybe to set the rules of the webinar, we please ensure that your microphones are not on if you're not presenting or contributing or making any remarks. So to ensure that we don't disturb and we catch up on the time. We'll just let you know we're also recording this webinar for reporting purposes and our archives to ensure that we don't lose track of whatever will be discussed in this very, very important webinar. That notwithstanding, please, CEO, over to you for your opening remarks. Then we shall proceed with the program as it is. Thank you.
Yeah, thank you. Thank you very much, Geoffrey. And allow me, first of all, to record my appreciation to Afreximbank, the entire team from Afreximbank, for partnering with Eabc in organizing this engagement, the webinar looking at how we can promote, how we can boost intra-regional trade. It is very important that we have this webinar in terms of understanding what are the current instruments that would enable us in terms of trading within the continental free trade area. So it is important that I give a brief background, again, why this webinar, and where do we want to take it forward. One, that when CFTA was signed in Kigali in 2018, there was a demonstrated political commitment among our heads of state in terms of moving forward in terms of this agreement to ensure that we grow the prosperity of this continent. The prosperity that we want, that is enshrined within the Africa we want, the Africa 2063, has to be led by private sector. Private sector need to play a cardinal role. So when you look at that political will and the commitment, currently 44 countries have ratified the agreement, have submitted the instrument of ratification. And I'm happy that almost five out of 7 countries from EAC, they have already submitted, and 3 of them have already started piloting under what we call guided trade initiative. That is Rwanda, Kenya, and the United Republic of Tanzania. So that demonstrates that private sector, we need to start preparing ourselves in terms of taking advantage of this market, the wider market of around 1.3 million population and around 3.4 trillion United States dollars. So the market itself is wide, and again, from the private sector side, any investors who want to invest in the region or who want to invest in the continent is looking at the market. And it's not only the market, but also we're looking at the growing consumer base within our region and at the continent wide. That is very critical. So we, as Eabc, we partnered with Afreximbank to ensure that the private sector understands what are the opportunities and what are the challenges. We are here to look at what are the challenges. The market, the agreement has been signed, the framework is there, but can we start trading? What are the preconditions? What are the prerequisites for trading? So when we carried out a kind of a survey within our region, the private sector within the region and highlighted some of the challenges. One of the challenges they highlighted was access to trade finance. Access to trade finance. And when you look at the data in East Africa, almost only 20% of SMEs can access trade finance. So it means all 80% cannot access trade finance. And when you speak to the Afreximbank and other development banks, they say that we have the money. So what we are trying to do is to address this information asymmetry in bridging the lender and the borrowers to understand, to bring them together to ensure that their viable projects can be funded. So when we brought that call to Afreximbank, they are happy and they say, we are ready to work with you, and we are ready to take it up, and we'll be organizing a number of events across the region to sensitize the private sector how they can access trade finance, how to without going through the normal lending requirements, which require collateral security, and where the banks are becoming more risk averse. So we want to the businesses, especially the SME business, to ensure they take advantage of this wider market. That's enough. That's not enough. Another aspect that has been the private sector has been grappling with is the issue of currency convertibility, and that's where PAPS comes to play a critical role. When you look at the data, the region, the continent loses almost $5 billion through currency convertibility, through exchange rates. So that's a huge loss to the business community. Now, Pan-African Payment System, which are also present in this webinar, they are going to tell us what instruments are there to mitigate such risks related to exchange rate convertibility, and how do we ensure that our currencies, you can trade using your own currencies, and the value of your goods remain the same. Sometimes we lose the value of the goods because of the currency. So this webinar again is to shed more lights in terms of the instruments to trade, to be used, trade instruments that are going to be used to ensure that our region remains competitive. So without any further ado, again, I want to appreciate all the panelists, especially the team from Afreximbank. I want to appreciate Eabc board that have agreed and endorsed our engagement between Eabc and Afreximbank to have a strong partnership to champion continental free trade area. Thank you very much. I wish you a fruitful deliberation. Over to you, moderator. Thanks, and asante sana.
Thank you very much, CEO, for those opening remarks and also setting the tone for the webinar. You provided very good guidance, and this gives us the gist of what we are here to discuss. And I like the statistics that you're bringing out in terms of the 20% of private sector unable to access, only that are able to access trade finance, and also the $5 billion loss in currency convertibility. And I think today these questions and many of like those will be answered in the subsequent presentations and discussions from our able-bodied panelists. Thank you very much, CEO, and I will definitely look forward to your engagements further during the conversation. But now let's have Dr. Gainmore Zanamwe, the head of Intra-Africa Trade Initiative, Trade Facilitation and the IATF, Afreximbank, also give opening remarks on behalf of the Afreximbank. You're welcome, Dr. Gainmore.
Thank you very much, moderator, and CEO, for those very kind remarks, which also help us to set the scene of this important engagement that we are having. And I'm really excited, and also I must say that the East African community is always, from the way we see it, been leading by example from the arrangement that you have at the EAC level, the level of integration that you have been able to achieve, as well as the way in which you have been working very closely with the government. I think that partnership between public-private sector relationship is something that is really important, and it's a good example for the continent, and that is why the bank always finds it easy to collaborate with the East African community and the East African Business Council. And I was also excited when we managed to launch the East African Business Council, Africa Trade and Investment Council, which is really an entity or an initiative that will focus on promoting trade and investment between East Africa and the rest of Africa. I know you've been doing relatively well in terms of promoting intra-EAC trade, and we now need to work together, as the CEO highlighted, to now focus on facilitating trade under the African Continental Free Trade Agreement. And in this context, we would like to actually assure you that some of the challenges that you have raised, whether it's finance, whether it's payment and settlement, as well as many others, will be addressed as part of the presentations that will be made by our team. The bank actually values the importance of intra-African trade in transforming the continent. We believe that we really need to do more to increase the levels of intra-African trade from the current levels of around 16 to 18%. And this should increase to the levels comparable to Europe and Asia. It is only by transforming intra-African trade to these higher levels that we will be able to create the much needed jobs for our young people in the continent, especially the women and youth. So the bank believes that it is only through industrialization, development of regional value chains, that is the only way in which we'll be able to increase intra-African trade. And we believe that we have the human resources, we have the finance, we have the natural resources. There is nothing that will actually stopping us from diversifying our trade away from over-dependence on commodities to the production of value-added goods and services that we can actually trade amongst each other and also export globally. So this is the context in which the bank has actually come up with a range of interventions that my colleagues will be presenting to try and change this over-dependence on commodities to ensure that we promote intra-African trade, especially in value-added products. So that is the overall context that we are organizing this webinar with you. We also will be sharing with you information on the Intra-African Trade Fair that will be taking place towards the end of next year in November 21 to 27 in Cote d'Ivoire. That is also an important initiative that will actually try to bridge the gap in terms of trade and market information. We really need trade and market information, trade intelligence for East Africa to be able to trade with the rest of the continent. Somebody sitting here in Egypt would like to know what is it that Kenya is producing, what is it that Tanzania is producing. And I speak with many people here in Egypt. Very few are actually aware that Kenya gold, Kericho tea, and Kenya coffee and other products are really, really very good products that should actually be traded within the continent. So we really need to do more in terms of sharing trade and market information to promote trade. We also want to highlight that we will be working with a number of countries within the continent to actually facilitate intra-African trade under the AfCFTA, and we are working with the AfCFTA Secretariat to support them to implement the guided trade initiative. But after the launch of the guided trade initiative, we have now started revamping efforts to facilitate the emergence of export trading companies that will aggregate products that are produced by SMEs, smallholder farmers, even large entities, to take them to the market under the AfCFTA. We believe that this initiative is very critical because, as you highlighted, some of the challenges that are being faced by the SMEs are largely as a result of a lack of a structure. So we are now going to put the export trading company as a structure that will make it easy for farming to be bankable, for the products that are produced by SMEs to be bankable. That will actually make it easy to provide finance to the SMEs that you alluded to. So with these remarks, I would like to thank you very much, colleagues from the East African Business Council, for partnering with the bank to host this important webinar. I don't want this to end as a talk show. I want us to be able to now start identifying key projects, key transactions that we can actually work together. Where finance is required, we can actually provide that support. Thank you very much, and I wish you well in your deliberations for the rest of the day. Over to you, moderator. Thank you.
Thank you very much, Dr. Gainmore. We really appreciate your remarks, and I like the part you have ended that shouldn't end into a talk show, but rather develop projects that can be supported by the bank. And we really appreciate the enormous work you're doing in supporting the guided trade, the AfCFTA, as well as your call on value addition and most importantly, inclusion of youth and women in the trading ecosystem. So thank you very much, Doctor. Your clarion call is well heard and taken note of, and we looking at ensuring that we have that. So without further ado, I think we can begin the presentations. And today we really want to have the Afreximbank officials.
That again is one of the social effects that are coming around.
Hello.
The other one that I want to speak to is around environmental considerations. The fear being that we should.
Hello. Hello. Kindly mute if you're not called to present, to make a presentation or to make contributions. We really call upon you to mute your microphone to ensure that you don't alter the program as it is. Thank you very much. So let's have the presentation from Mr. John Bosco Sebabi. As I said, today we are unpacking the products from Afreximbak. As the CEO said, there's that information asymmetry, and I think this webinar will help us to bridge that gap, to ensure that we know what products does the Afreximbak have that the private sector in the EAC region can tap into, and how is it that Afreximbak is going to facilitate to ensure that there's uptake of these products from the private sector in our region and beyond. So Mr. John Bosco Sebabi, the Deputy Head of PAPS, is going to make a presentation. Please, Mr. John Bosco, ensure that we have 10 minutes of your presentation, and we shall have a Q&A session. And I encourage that panelists, please send your questions.
Hello. We have lost you, Geoffrey. I think John Bosco, proceed.
Thank you very much. And good morning, everyone. Thank you very much for inviting us, Afreximbank and PAPS in particular, to be able to speak to you about on the PAPS payment system. So we really value this moment, and I'll take a few minutes to go through the presentation in terms of what's the business case, what's the rationale and design principles of PAPS, the governance, because the governance is very important in a bit like this, and the status and plans for Q4 2022. Let's first, I like the opening of the CEO when he said that we are losing a lot of funds on the African continent in terms of the itinerary of the payment. Today, this is the itinerary of the payment. A payment from Kenya to Tanzania will go through first hit US or Europe before it comes back to the country as this time. So this makes us lose time and lose money. In terms of sorry, excuse me. in terms of the business case, cross-border transactions have become very expensive. And this 5 billion that the CEO mentioned is not in terms of only the currency convertibilities. It's also in terms of the payment charges. And that's not mentioning the billions of dollars that we actually deposit in correspondent banks to be able to transact. So all these have inherent losses. And this has shown that we as an African continent, if we own our payments infrastructure, we can have benefits from this and some savings done from our transactions. For instance, in 2017, about 18.8 billion of commercial transactions, which were made within Africa. All of them were made within Africa, but 80% of these go overseas for clearing and settlement. So we only settle 20% of that. So we need more to be settled on the African continent and being instant. And this is the rationale for PAPs. We mentioned about the signing of the AfCFTA agreement in 2018 Kigali. For this to be successful, it requires to have an integrated content payment infrastructure. For trade to be done, payment is a very big component of it. And what's happening today is that the current systems are a bit fragmented. They work in a region or in a country and don't connect to each other. So this cannot support intra-African trade as wished for the AfCFTA. So this kind of arrangement is resulting to diversion of trade. Trade normally flows in line with where payments are easier to make. And so cross-border transactions have been very expensive for us, and in terms of also depending on the foreign currencies. And this to the detriment of our own currencies. So that means that in currencies that inhibit development and usage of our own currencies to be convertible, to be tradable to each other, because we are depending on that currencies. And therefore, there is a lot of need to eliminate this, to eliminate the delays, the losses we're incurring, and that's why Afreximbank conceived the African payment and settlement system. Now, to be able to pull off or to start an African payment platform, it means that what do we need to see? What are the principles do we want to see? We want to see a system that pays in local currencies and is fit for purpose in terms of it suits everyone on the continent by utilizing our own local currencies. And also the content has to invest in a centralized financial market infrastructure to be able to facilitate the trade that we're talking about. In a payment, there are three risks that we normally look at. We normally look at liquidity risk, settlement risk, and credit risk. Now, for settlement finality to be achieved, settlement needed to be backed by a strong and guaranteed institution. So we had to identify an institution that can guarantee settlement finality. And also for a payment system to be strong, it has to be founded on a strong legal foundation and be built on a solid and proven technology. Also, a very important principle is that central banks had to be at the center of it. I just responded to a question in the chat, and I touched on central banks. I will touch on it more. So central banks have to be part of this. If a payment system is supposed to be a systemically important payment system, it needs to have central bank backing and central bank involvement and innovation and regulation around it. And also to have this system, we have to have a very broad buy-in, especially at the highest level in Africa. And we start at the AU level. Another principle that's very important is to have credibility for anything, for any system. It has to be piloted in an environment that reflects the whole African kind of context, where we have bilingualism, where we have multi-currency, multi-regulators, etc. Africa is normally divided into three. You have the Francophone Africa, Anglophone Africa, and Lusophone Africa, and of course the Arab Africa. So we have to have a system that combines all those and is able to work in all those environments. And also to be able to work very well, we recognize that there's a multiple players in the game. So that means the existence of regional payment system and the need for a centralized system was important to ensure interoperability. So PAPS comes to offer this interoperability. So where are we how is PAPS structured in terms of these principles? One, it's founded on a sound legal basis. Afreximbank that's implementing PAPS or that has implemented PAPS in its own mandate, it's contained and the countries that formed Afreximbank, over 50 countries in Africa have signed and acceded to that charter. The ensuring needs that Afreximbank is mandated to facilitate payment arrangement to increase intra-African trade and extra-African trade. So this is a mandate and legal mandate that the bank carries. And also we have successfully, we completed the pilot last year. It worked very well in the West African Monetary Zone. It's a zone of 6 countries speak French and English and use multiple currencies and 6 central banks as well. So this was piloted very successfully. So there's credibility of the system. The system also that has an instant payment that's done in local currencies. So that means a payment originates and terminates originates one currency in a Kenyan shilling and terminates in a Burundian franc. So this has happened. We've done it in the West African Monetary Zone. Payments have gone through the Naira and terminate into the Cedi in Ghana, which has been proven. So PAPS also runs on the secure and proven technology. It's built around the ISO 20022, which is the latest security technology in the payment industry. We have also received the certification of the ISO 27001, and we're working on other certifications also in terms of system security. Settlement finality is guaranteed by the Afreximbank, which has put a facility in place to guarantee payment finality. So that means any central bank that is a settlement agent in PAPS cannot fail to find funds to settle. There's a standby facility it can touch on to be able to smoothen the payment system, and no glitches can happen that any member has failed to settle. So that is well guaranteed, and that's a very big aspect in the net payment system, which is systemically important, like PAPS is. Also, we have central banks running this. Our governance, which I'll touch on later, constitutes of the central banks. And that's why in my explanation, and the question that when are we working in East Africa, we have had good discussions in the East African community. The governors of the central banks have agreed to come as a block, all the 6 of them at that time when they agreed. Now there are 7. And now we are discussing a couple of technical issues with the technical team. We will meet with them in the week of 31st October to 4th of November this year, in 2 weeks' time, to iron out all that and then agree on how we can start on to do the integration. So we are the doorstep in East Africa. And also the integration of PAPS is very flexible. We can integrate to regional systems, we can integrate to national systems. So we are flexible in terms of integration. And we've done this in a very collaborative manner. We have had discussions with COMESA, the regional payment system. We've had with East Africa, of course, as I mentioned. And now we are actually discussing this at the Africa level with the Association of African Central Banks. We are right now in Cairo and we have meetings with them. So we are approaching this in a very collaborative manner. So what are the critical objectives of PAPS? 1 is to increase intra-African trade. 2 is to facilitate economic and regional integration. And also the most important is to reduce costs of cross-border payments. There are 4 challenges that have been identified by the G20 as challenges for cross-border payment systems all over the world. 1 is cost. Costs are high. 2 is the accessibility. 3 is lack of integrity, lack of transparency, sorry. And 3 is speed. So how does PAPS do it? 1, PAPS has an instant payment system. The payment goes through instantly and one receives funds in a few seconds. The system is designed that we can receive a payment in maximum 120 seconds. But in the pilots that we've done and the live transaction we've done in West Africa, we've not gone beyond 10 seconds. Everything has happened below 10 seconds. So that is solving the speed. And the way we access PAPS is through all payment service providers, central banks, and mobile money operators have a way they can link to PAPS. I'll go through it when I look at the ecosystem. So the other objectives to reduce the time and variability of cross-border payments. that can take 2-3 days today, one that to be instant and maximum, as I said, 120 seconds. This will decrease liquidity for requirements for commercial banks and central banks, and also to a large extent, this intermediate correspondent banking for intra-Africa. That means a payment within Africa should remain within Africa, because Africa will keep trading with the world, and that correspondent bank relationship can remain. But within Africa, we need to disintermediate this so that the time becomes shorter. And also the objectives that this whole having one centralized infrastructure for payments strengthens the central bank's oversight in cross-border payments to avoid money laundering, to avoid many other things. Now, this is an ecosystem, and this brings in the accessibility. We have the PAPS core, and the primary participants are central banks, commercial banks, and technical connectivity providers. These are like switches, Ken switch, Rwanda switch, and all that. So that's the primary connectivity. Then above that, we have the commercial banks and other payment service providers that must be approved by the central banks. So this is another layer that offers access to those institutions, but in a secure manner. Above that, we have the products. We have the remittances. We have the escrow, the other payment card schemes. Any other comes in. The layering helps to screen. That means that primary participants are responsible for the secondary participants, and the secondary participants are responsible for the others. Because for any or remittance company to come on board, it must be sponsored by a bank. That ensures that there are levels of checks, and you don't have any compromise into the system. So this ensures access, but in a secure manner. How does it work? This is a snapshot of how it works. So if a payee is in a client initiates a transaction through any payment channel, through an MNO, through a bank, whatever, that's provided by the banks in that side, in country A. Now the sending participant sends a message with all the payment details. That means if you go to your bank, they will send the details to PAPS of who you are, who you are sending the money to, and all those details. Now PAPS will validate the payment message, and if the sending participant has got sufficient funds, those funds are blocked. And instantly, an instruction is sent to the other party to find out, to validate the details of the beneficiary. Who is the beneficiary? Go through the KYC. Now, if the receiving participant responds positively, then the account is credited immediately. So that means the sending participant is notified of the outcome, and also the recipient is notified of the outcome that they will receive the funds. Now, that is the instant payment. So the client who has sent has been debited, and the one who has been who was received has been credited. And the following day, the central banks will do this settlement process. So the payment is instant, and the settlement is done by the settlement agents, who are the banks and central banks, and it happens the following day. So there is no risk for economic operators not receiving their funds. They receive the funds, and the banks will do their job after that. What's the governance structure? And this is how we are governed to be able to, this follows from the principle of setting up payment systems, whereby the operator and the system management system ownership or management have to be segregated. So PAPS is an independent autonomous division of the Afreximbank, but independent in governance. So we have our own governance structure. It's governed by a governing council, and this is constituted by governors who are members of the PAPS. So if the central banks come on board, their governors automatically become PGC members. Now start to regulate PAPS in the normal way that central banks do regulate payment systems. This to ensure credibility and security of the system. And we also have the Payment Systems Oversight Committee, which is constituted by heads of payment systems in those central banks. These are the experts doing payment system today. And so this ensures that PAPS conforms to the regulations, to the rules of the game in payment systems. And also we have the PAPS Management Board, which is like a board of directors for any company, which looks at the technical and operation management of PAPs. And we have the PAPs management team, which is the CEO Mike and myself as the deputy, and our team together. So where are we today, and what's our approach? The PAPs approach is not here to uproot or to replace any system. We are having discussions. AACB is the Association of African Central Banks. We have discussions with BUNA. BUNA is an infrastructure that links the North Africa to the Arab world. So we are in touch with them to be able to interconnect. That means that we connect. We will, after integration, we'll be able to connect the Arab world to Africa. We are also in discussion with Eabc. Eabc is the East African payment system. So those are the East African central banks, and BEAC is the central bank of the central bank in the Central Africa, and also REPS is the regional payments and settlement system within the COMESA region. So we like to offer interoperability by connecting to the other already existing infrastructure. And this is our modus operandi, this is our approach. This is our growing network today. We have over 40 banks that have signed up in the WAMZ region and 8 central banks so far. So the network is growing, and as I said, very soon we are touching to East Africa with the central banks coming on board. And this is our plan for Q4. We are looking at signing up 4 more central banks from the different economic blocks, and we plan to have meetings the East African Central Bank Technical Meeting, which is happening later this month and early next month in that week. And also later in November, we'll have a meeting with the SADC technical team as well. The SADC is the South African Development Community, and the technical teams of the central banks. So we have these meetings, and the idea is that after the technical meetings meet, then the governors are presented, and then we have these approvals. So ladies and gentlemen, thank you very much for your attention, and maybe I can answer a few questions. But as I said before, if you see me dropping off the webinar, I will have a meeting with the AACB in the next 1 hour. Next actor has already started, but I'll be joining. But I'll answer a few questions. Thank you, moderator. Over to you.
Thank you, Mr. John Bosco, for that elaborate presentation. I think you've opened our eyes on how the PAPs works and expectations. Maybe my personal question would be, how does the PAPs work in a region where central banks are still operating in silos and they are not yet integrated? Then how will the PAPs address this? But there's a question also from Mr. Habimana, who says, I would like to ask how SWIFT system is working together with PAPs. And maybe before you leave, I would be happy to respond to those and many others before you drop off, because this is a very interesting topic and part of the conversation that is still disturbing people's minds, if I would say. So this would be happy to hear from you.
Geoffrey, I see someone, Bernard raising his hand. Give him a chance.
Yes. Yeah. Yes, Mr. Bernard. Yes. Maybe.
Yeah. Thank you so much for this very, very informative webinar and the presentation. And I have carefully followed through the presentation of PAS. And of course, I appreciate so much the payment system because of my background. And I can only say that for those of us who are really so engaged in trade, this is like a miracle, especially when it comes to our current focus on trying to get goods, say, from Kenya to West Africa and many other countries. We see this as a miracle and very, very practical. I think my only question, and I had put it on the chat, is which countries is PAS being piloted on? This is very crucial. And then number 2, given that AfCFTA has actually been rolled and trade should be taking place. And for some of us who are in this space, what we're trying to do is trying to encourage private sector through awareness creation and all to trade across the board. So one would want to know, what plan do you have to roll it out into rest of Africa? Do you have like a roadmap, and can it be shared? Because in the work we are doing, and we will be able to follow through with you through Eabc, is how we partner with you in regard to the awareness creation that we are, bringing out, so that we show companies that there is meat potential, there is trade potential for meat and many other products that we have been able to identify. So this is the question I wanted: which pilot and the plan to roll out to rest of Africa, and if there is a roadmap, because then that would inform even the our approach. You'd like to go where facilitation for payment is being done. Thank you.
Thank you very much. Moderator, should I start to respond, or you're waiting for more questions?
Maybe are there other two questions that have come through? If you allow, let me just read them to you. You note them, then you respond to them. Still from Abimana, says the issue of corresponding banks, which international transactions always request when it comes for trade finance instrument. How does PAPS, how PAPS is integrated to solve this and facilitates instruments? Probably you can respond to those. If there are any, then we'll flag them to you, Mr. John Bosco.
Maybe also, Geoffrey, if I may also add and ask a question to my brother, yes, John Bosco.
Please go ahead.
Yeah, is the transaction costs and the sustainability of PAPS. I know it is an initiative at the continental level, and you are trying to bring it at EAC level. You know, as you mentioned, East Africa payments has not moved. It has been slow. So integrating PAPS and PAPS, you are moving quickly, and as Bernard said, we already have guided trade. Countries have started piloting trading, and you are still engaging. So how are you going to infuse that as quick as possible? One, to be clear, is time, cost, and efficiency. How are you going to do that? Thank you.
Thank you very much for those questions. I noted them. Let me begin with maybe the one from the whoever asked about SWIFT, how we are working with SWIFT. Now, within PAPS, if the institutions are within PAPS, we don't use SWIFT. We have a VPN. So now, the only way we link with PAPS is with SWIFT. Sorry, is when the central banks are wiring money to Afreximbank for settlement, because they can do that from anywhere, wherever they have their accounts. So otherwise, there's no SWIFT involvement in this. So purely a PAPS infrastructure running on the VPN between the members. So now the other question is that where central banks have not yet joined. Now, where central banks have not joined, it becomes a challenge to operate PAPS. However, we are looking at, we are discussing now with the central banks at the African level. That's why we have this meeting I talked about. How do we have a settlement process that involves banks without necessarily a central bank? So that if you have a bank participating in PAPS, it can also become a settlement agent. So that's a discussion going on, and the central banks are appreciating this because as a way to move quicker. So we must appreciate that to run some of these infrastructures, there's a combination of two things. One, speed, but also ensuring security and compliance. So that's what we try to look at. But in terms of where central banks have not joined, it's a bit of a challenge for now. We're trying to solve it by involving banks that can come in and become settlement agents. So that's an issue we're dealing with as well. Bernard asked that, well, which are the countries where the pilot has begun? PAPS began in the West African Monetary Zone. This is Nigeria, Ghana, Gambia, Sierra Leone, the Guinea-Conakry, and the Gambia. So these are the 6 central banks. We have other central banks that have signed up, and now we're doing integrations and also trying to get their banks. So transactions can also begin in those regions. In terms of the rollout plan, when we launched PAPS and finished the pilot, we wrote all central banks in Africa. Now we are meeting regions that are kind of ready, and we met with all of them. We've had great discussions with the Central Africa. This is a region of about 6 countries in the CEMAC region. They have one central bank called BEAC. East Africa, we're the same. They have also agreed to come as a block. Only now we're discussing a few technical issues like how will the settlement be, how can we do this, how can we do that. So that we are doing later this quarter or later this month. We're also having discussions with BCAO as a group. It also has it's a central bank that has many countries in the West Africa, and SADC as well, and COMESA, we've got an MOU. So that our rollout plan now is regions that come through and are quicker. So as we go, regions are coming almost at the same time. So we find ourselves discussing with Central Africa and East Africa at the same time. So it's not a plan to say that our intention is that by at least end of next year, we should have connected and signed up all central banks. And now we start to integrate the commercial banks one by one. So that's our plan, that we complete this by end of next year at least. Given that at Africa level, in terms of with central banks, once that agreement is sought and we agreed on the plans, then we can roll it out properly with kind of in every region that comes on board and is ready. So we don't prioritize any region. It's the whole of Africa that we've written to, and we now, whoever is ready to start integration, we start with them. We have an issue, we answer it, and then we move on. So the rollout plan is more kind of broad. Corresponding banking requirements. Now, in terms of trade within Africa, and this is the objective and aim of PAPS, we want to have disintermediate correspondent banking. That means if you are trading from Rwanda to Kenya to Zambia, that the requirements only the PAPS payment, which is instant. So it won't be like maybe give me a SWIFT copy. This is what we are used to. Give me a SWIFT copy if you have transferred the funds. So the SWIFT message, the PAPS message will be instant. So this is what we want to the people to get used to, the firms to get used to. So this is how we want to run it, so that PAPS becomes a household name in terms of doing business in Africa. The CEOs touched on cost of transaction. Now, there are 4 challenges that have been identified globally as issues in cross-border payment systems. 1 is cost, 2 is speed, 3 is transparency, because there's so many touch points, and access. Now, how does PAPS address each of them? 1, our cost structure is very, very low. Once banks sign up, we normally share it with them. And of course, in East Africa, I think after these meetings we're going to have with them and have some commercial banks, we'll certainly be able to share this with them. So how we do it in East Africa, if we seek agreement with the central banks and they approve this as governors, then now we start to meet bankers associations in each country or all over together. If the East African Business Council can also facilitate that, we meet banks together. Now we start to share some of this information. This is how it's done, this is how it's going to cost you, and all this kind of environment. So PAPS comes in to offer the payment services, cross-border payment services at a very low cost. We've looked at the cost structures of everyone. 2 is the speed. I mentioned about the instant payment in a couple of seconds. So that solves the element and the challenge of speed. Speed is a very important factor, because the faster funds flow between economic agents, that means increases the velocity of money and increases the speed of doing business. So it stimulates economic activity. Three is transparency, because we look at few touch points. You have your bank and the central bank, and the other recipient has the bank and central bank. You don't have so many touch points in terms of touch points become expensive, they delay, and they don't offer transparency. So we try to eliminate that as well. And in terms of access, we are a platform that's open to access, created by all players in a tiered manner, to ensure security. So that's how I can answer those questions. Unless I have anything I've left out, but these are the ones that I recorded, moderator.
Thank you very much. I don't seem to have a hand or any other questions. Hello, can you hear me?
Yes, I can hear you. I
Yes,
can hear you.
I don't seem to find. I don't seem to find another hand, but someone just sent a question to me, and it's saying that I flagged this to on his behalf, and it's saying how does how does the system address the cross-border online payment system through internet providing companies, given that also there's a lot of charges on interbank through telecommunication companies. How does the now system reduce that interoperability charges? Thank you.
Cost. Yeah, I'll answer that like this. No, what actually is the major hurdle and what increases the cost in these transactions is not about the telecom charging because of the telecom charges. It's about the convertibility of the money from the Rwandan francs for you to get from the Rwandan franc for one to get Kenyan shilling. What happens that transaction is first converted from the Rwandan francs into dollars, and then from dollars or euros into the Kenyan shilling. So there's a double kind of exchange. That's what increases the cost. So what PAPS does is that we see how we can utilize our own local currencies by netting them off. So that's what will reduce this cost. And of course, how we are going to support these online trades, e-commerce platforms. We like the e-commerce platforms to come in as services. They will join as indirect participants into us, and then we can be able to support them in both roles, the payment role or the settlement role. So we can support either way. So what's happening is that aggregators like MFS are talking to us. We are talking with them to see how we can come in with this to support the settlement process.
Thank you. There's one final question from Bernard, and the question goes to the opening remarks, gentleman, Mr. Dr. Gill, and said would want more information on export trading company that was mentioned as a facilitator of aggregated SME exports destined to Africa. It came through as a Continental partner for SMEs. Maybe. So,
ladies and gentlemen, yes. Moderator, if I can be allowed to log off. Thank you very much.
Yes,
but my email is available to answer any questions. Thank you so much.
Maybe moderator, before John Bosco, we need a physical training by PAPS to our members. There is a strong appetite from EAC financial institutions to understand fully on PAPS. So I think you need to arrange for a physical meeting, and we will champion that. Eabc will champion that.
JB, that's music to our ears. Can that happen next week?
Thank you very much.
That's music to our ears. We like to hear that. We are ready, ever ready.
Okay, very good. Thank you.
Thank you so much. I'll be waiting for that date and the invite to be able to do that.
Before you drop, my vice chair is on the call.
Yes, Dennis has a question. I'll wait for that.
Yes. Let's give moderator Geoffrey. Let's give our vice chair a minute. 1 minute.
Yes. Sure. Thank you, JB and JB. There's a key element I think Bosco raises to give awareness about the PAPs. It's a critical thing, and I think it should not only focus on the East African region. I think we need to target specific countries in the northern part of Africa, where you are sitting, John Bosco, in Cairo, so that we have a wider group and a wider network of people who understand the PAPs system. Because as you know, this is one of the biggest challenges of trading between Cairo and ourselves here. The conversion, the elements. I usually mention how Cairo still asks us here in Kigali to use Western Union to pay for goods we buy there. It's a very predominant system of payment in Cairo. A lot of time they ask you Western Union, Western Union. And so can we, among other things, can you look at a way of doing away with the Western Union, but harmonizing systems so much that a transaction is quickly picked, paid in Kigali or in another country and picked in Cairo, and in a language, because language is also another challenge. I don't know if you have already talked about that, but because they operate in the Arab language, we operate in the English language. There's also a challenge there, which we need to address within the payment system. So there's the speed of it, there's inclusivity, so that we are not only East Africa, then the training part of it. Yes, we can arrange that meeting, but I think let's organize it properly so that you bring on board the key people in Egypt, the manufacturers in Egypt, the shippers in Egypt, and the other countries that are piloting. So that we try to create a bigger group that is aware of what we are doing, because there are a couple of questions there. People don't understand what we are talking about.
Thank you very much, Vice Chair, for that. This is really, really very helpful. The awareness is very critical. Thank you so much.
Yeah.
Thank you very much, John Bosco. I think we can allow you to go for your next meeting. Thank you very much for your inputs, and I think the call from Eabc on awareness should be noted. And definitely very soon we'll touch base with you again.
Thank you very much.
Engagement
my email address is the chat group. So my email address is there. You can always get in touch with us.
Thank you very much. Thank you so much. It's noted. I think that there's a question to Dr. Gainmore on the issue of corresponding. The company that has been contracted to pilot. Probably Dr. Gainmore, you can respond.
Yes, thank you very much. Let me also take this opportunity to acknowledge the Vice President, Mr. Carrera. I had not seen him, but it's good to see you, sir. And yes, the question that was posed on thank you very much. Thank you very much. Yes. The question that was posed on export trading companies is a very important question, and we actually are now at an advanced stage of implementing that initiative. We were actually requested by the AfCFTA to make a presentation to the Council of Ministers. We did that in Accra a couple of weeks back. And the concept was well received, and we have already undertaken training in about 7 countries, including Egypt, Kenya, Cote d'Ivoire, Nigeria, South Africa, Malawi, and Ghana. And we also, following our presentation at the Council of Ministers, a number of countries have requested similar support, including Rwanda, etc. We are trying to actually facilitate the emergence of export trading companies to support, in particular, smallholder farmers and SMEs to be able to export, because these small players normally find it difficult, and they've got a challenge in terms of exporting, either dealing with the trade regulations, accessing finance, and all those kind of things. So it's an initiative that we will be implementing in a number of countries. And the key issue is to have key business people who are willing to champion this initiative. We can have a further discussion with the EAC Business Council to see how best we can actually implement it in key countries in East Africa that are interested, as well as at the regional level. So that's basically what I can say for now. Due to time constraints, I'll not be able to share more details, but I'm happy to engage with the relevant stakeholders to see how best we can support the establishment of these export trading companies to facilitate trade under the AfCFTA. Thank you very much.
Thank you very much, Dr. Gainmore. Before we go to the next presenter, I wish to acknowledge the presence of the former chairman of Eabc, Vimal Shah. You're welcome, sir. Thanks for making time to this call. Please, whenever you have a contribution, let us know. I know this topic is of great interest to you, sir. So we really acknowledge your presence. Thank you very much.
Thank you. Thank you very much. I think I have one contribution to make, if you allow me to.
Thank you, sir. Please go ahead, Mr. Vimal.
I think there's the traditional role of banks who do these transactions, but also I think fintech and new ways of digital technology can really help speeden up this if Afreximbank really coordinates with a lot of fintechs. This whole process of payments across AfCFTA can be smoothened and become much more easier and become very digital. So I don't know if Afreximbank is willing to participate or partner with fintechs. It's a question.
Thank you, Vansha. Dr. Gainmore, would you want to respond to this quickly before you go to the president?
Yes, thank you very much. Thank you very much. And this is one of the issues that we're actually looking at. And when my colleague also present under the Africa Trade Gateway, she will also touch on some of the things that we are doing on the digital space, including collaboration with fintechs. We are working with fintechs on PAPS, the payment and settlement system. We're actually trying to onboard not only commercial banks, but also the fintechs, because we recognize that they play a vital role not only in expanding financial exclusion, but also in actually catalyzing the implementation of PAPS as well as facilitating trade. Thank you very much.
Thanks a lot. And I think that would be quite valuable because you could coordinate on costs, because the costs in Africa are exorbitant. I think that's something that needs to be taken care of, and also ease of doing business. So I think with those two, you can partner with fintechs to bring down the entire cost and the ease and the speed of transactions. Thank you.
Thank you, Mr. Vimal Shah, for your very valuable contribution. That's noted, and I think we'll have more to it in the respective other presentations. So let's have Mr. Frederick Saidu, the Senior Specialist, Trade and Corporation Finance, to take us on products and initiatives to support intra-Africa trade and investment. Please make it 30 minutes. We are already past time. I ensure that you present within the time allocated. You're welcome, Mr. Frederick.
Okay, thank you. Thank you, Mr. Moderator. Just give me a second to share my screen. I hope that you can see my screen.
Yes, please go ahead. I can view it on my side. Okay, and I hope everyone can see it. Yeah. Over to you.
Okay, thank you. So quickly, my presentation, and sorry if my voice is hoarse, it's 3 a.m. here in the US, so forgive me if I'm sleepy or my voice is not very, it's not sounding the way it should. So my presentation will be in 3 parts. Generally, just to give you an overview of the bank.
May you please mute? May you please mute? Kindly mute if you're not.
Frederick, you're on mute. Kindly unmute your mic.
Mr. Frederick, please unmute and speaking muted.
Okay, thank you. Thank you. Yes, so I was just saying that my presentation will be in 3 parts, just a quick overview of the bank. Then we discuss some of the financing products that we have to support intra-African trade and the implementation of the Continental Free Trade Area. Then we proceed to some of the facilitation efforts that we are putting in the same vein. As you know, this has to be both a delicate balance of both facilitation and financing if we are to get the results that we all expect. So generally, and for those who may not be very familiar with the bank, we are a development finance institution headquartered in Cairo. Essentially, our mandate is to promote and finance intra and extra-African trade. And I want to place emphasis on the promotion and the financing. Okay, so we not only finance, but we also do the promotion, and which is why my presentation is in 3 parts. Then, of course, the second bit is that we finance intra-African trade, but we also do finance extra-African trade. And in the subsequent slides, I'll emphasize some of the solutions and programs and initiatives that we have in this regard. We are, as I said, a bank, a multilateral development financial institution. We are primarily owned by African states, that is African governments and central banks. Nearly 65% of our shareholding is owned by this category of shareholders, including Kenya, of course, and members of the Eabc. EAC, we generally have 4 classes of shareholders, one being the African governments and central banks, which is the class A. Then, of course, we have a class B shareholding, which is extended to regional financial institutions. Then we have a class C, which is for non-African institutions and shareholders. Then a class C, which is depository receipts listed on the Mauritius Stock Exchange. We cover the entire continent of Africa, except for 2 countries at this time. And so, but for the EAC community, we cover the entire regional economic community, and therefore we can do business in these countries. We operate as a DFI using regional branch structures. So we are zoned into a Francophone West Africa zone, where Abidjan is the head office. Then we have a Anglophone area, which is based in Abuja, Nigeria, covering the Anglophone West Africa. Then we have a Harare office, which covers Southern Africa. Then for the EAC region, we have our offices in Kampala, in Uganda. And then for Central Africa, we have an office in Yaoundé, Cameroon. As an institution, we are investment grade rated, and which is an important feature to note, because with that, we are then able to intermediate successfully on behalf of our clients and the governments of Africa in the transactions that we process. Just to give you a gist of the size of who we are, because we get this is a recurring issue. People do not really understand or do not know what the capacity of the bank is. So we have a total asset or total balance sheet size of about $22 billion, of which the loan book is 18 billion. Our liabilities and others, as you can see, is also in the range of about $18 billion. Even though we are a DFI, we do open accounts for clients, unlike the African African Development Bank or the World Bank. We do open accounts for corporate clients, for sovereigns. We do take deposits, and we can open letters of credit and other similar instruments that need to be opened to commercial banks. So essentially, we can do anything a commercial bank can do within the remit of our policy, within the remit of our mandate as a bank. This this just shows some of the countries that fall under the various regional zones which are earlier talked about. So this in a nutshell just gives us who we are as a financial institution, as a DFI owned by African governments and central banks. Investment grade rated, meaning we can then intermediate favorably on behalf of our shareholders and clients, and operating on the basis of regional offices that enables us to intermediate and be closer to our various clients across the continent. As a bank, we operate on the basis of strategic plans. Our current strategy that we executing is what we refer to as the Impact 2026, extending the frontiers. And this has been conceptualized along 3 main pillars, and then a 4th pillar, which is internal to the bank. The first pillar for us is to implement to promote intra-African trade and to implement the Continental Free Trade Area, which is the main thrust of what we intend to do under this strategic plan. Then, of course, at the same time, we recognize that to promote intra-African trade and implement the Continental Free Trade Area, Africa needs to industrialize. We need to develop the goods and services that we can then trade as a continent instead of trading in raw commodities. And so the promotion of industrialization and export development through the use of industrial parks, agro-processing zones, and others is the second pillar of our strategy. Then, as I said previously, we are a bank that promotes both intra-African trade and extra-African trade, and therefore our leadership in global trade finance banking is the core pillar, is the third pillar of our strategy, where we continue to deepen and expand the financial offerings that we offer African financial institutions to be able to undertake transactions on behalf of their clients. Then, of course, we need to do all this sustainably, and that is why financial sustainability is a core part of our strategy. We are a DFI that operates on commercial lines, and therefore we need to operate profitably with adequate ratios that enable us to maintain the rating that we have, and also to access funding at a much more competitive cost for the continent. So this summarizes who we are as a bank, just as an introduction. Just give me a second. I just noticed that it's going off. Just give me a second. So continuing with my presentation, I proceed then to the key thrust of our message, which is the financial instruments and interventions that we deploy to support intra-African trade and the Continental Free Trade Area. So essentially, these are in 2 parts, as I said, those that support intra-African trade and those that support extra-African trade. The generality of what we do under our trade finance programs, and don't forget we are primarily a trade finance bank, is providing trade finance, both pre-shipment and post-shipment financing. We also do offer lines of credit that support the expansion in credit lines to financial institutions and to companies to support trade across the continent. We offer various note purchase programs, that is for larger companies that are interested in borrowing through this program. Direct financing, in addition to the trade finance lines, We do offer receivables financing, project financing for those that require project financing, and as well asset-backed financing as a whole. The flagship under the trade finance program for the bank is what we call the AfTraf program, which is extended to commercial financial institutions to support the confirmations of letters of credit, bank-to-bank reimbursements, the avalization of promissory notes or bills of exchanges, providing bonds and guarantees, as well as trade confirmation. So these typically are to financial institutions to give them the capacity that they need to further financial intermediates on the continent. We recognize that we are DFI sitting in Cairo. We will need to intervene through the various commercial banks. And so this is a very important program to give capacity to local commercial banks to be able to then intermediate directly with their clients. On supporting intra-African trade, we have various programs. We have various financing instruments that we deploy. Some of these are our global credit facility for intra-African trade champions. And as most of us are pretty aware, most of the global multinational companies that are sitting in Europe or the Americas have global finance facilities that are extended to them by their home states or their home commercial banks, which are the big commercial banks, international financial institutions. And so we have also replicated what we call the global credit facility for intra-champs. And these intra-champs are companies we deem as Africa's multinational companies. So if you're a company that has a turnover of $200 million on our continent, you operate in at least 2 countries. And of course, you are into exports, manufacturing or value addition, we are happy to consider you under this class of financing, where we provide universal lines of credit at one central point that you can deploy across your operations in the entire continent, instead of having to do multiple credit requests in every geography that you operate in or across multiple facilities. We are able to give you a flexible facility based on the criteria that you can then deploy as you deem fit in your operations within the continent. One of the very popular products that we have that supports intra-African trade and the implementation of the Continental Free Trade Area is our intra-African investment finance facilities. Again, we recognize the very low African direct investments that we see on the continent. And so this program is aimed at supporting existing companies well established in one geography that have seen opportunities in another geography and want to expand. So we are able to provide investment financing, or let me relate it to the third one, investment guarantees, that will enable you to source funding in the third country, or to acquire a new business in that country, or even set up operations from afresh. This is non-equity based. We offer commercial debt financing, and then the promoters who may be required, depending on the assets credit, to provide their some equity contribution, but essentially to support African companies to increase direct African investments in other countries. Then the third product that we offer are the country guarantees, where again we recognize that African investors may be going into countries that they are not familiar with, or for which their partners and promoters would want to seek some assurances against government expropriation of their assets, against certain sovereign risks that may be incumbent in those investing countries. And again, because 65% of our shareholdings is from African governments, the owners, we engage daily with them to secure various preferred creditor rights in those markets. We are happy to assess and to provide country guarantees for your investments in other African countries, if you so desire. Then, of course, as I said, we do offer LC and LC financing facilities, even though we are DFI, that enables us to be able to offer you issue an LC as a bank that would not require confirmations because of our investment grade rating, thereby reducing your cost. Then, of course, we have, as my colleague Gainmore mentioned earlier on, the promotion of export trading companies is a key part of what we seek to do. Therefore, we offer what we call the packaging credit facilities for export trading companies. So we offer loans and lines of credit generally that will enable these export trading companies to be able to support their value chains by giving them financing to be able to buy and purchase resources and commodities that they can then process, aggregate, and add value before they export or sell into other African markets. And if you're a commercial bank, we do offer what we call the Intra-African Trade Services Support Facility. That is targeted purely at LC confirmations and negotiations and advising and things of the nature for transactions within the continent. We are able to do that as a bank. Then, of course, we offer various financing across the supply chains of our clients. We are able to offer supply chain financing, which is a new product that the bank has just introduced, using technology platforms that are able to provide financing to our customers, our SME clients, on behalf of the using the credit rating of their buyers, their main suppliers. Again, the contracting related guarantees that we provide relate to our ability to issue bid bonds, performance bonds, advance payment bonds, retention bonds, mainly for the construction industry and for companies that are doing cross-border contracts in Africa. Then, of course, we have and are able to support African companies with what we call the export contract availability guarantees that enables you to secure long-term financing from your commercial banks in country for contracts that you need to execute in those countries, but for which you may not have, you need to financing for 10 years, but your contract is probably 5 years, then able to offer you some guarantees to enable you to secure long-term financing from your local banks. If you are not able to secure directly those financing from us, due to FX issues, due to country limitations or things of the sort. Then again, we do offer financing for our transit guarantee schemes. This is being piloted in COMESA, and it's an important instrument for us as a bank because, again, the earlier questionnaires raised the issue of cost. And so for us, the ability to issue one technology-backed guarantee that enables you to export or transit goods from Kenya all the way to Rwanda, for example, is an important cost saving. And so yes, we have started this in the COMESA region, and we are happy to work with our various clients that are in the transport and logistics business, freight forwarders, and general clients that are involved in exporting goods and services. The sense of this presentation is just to give you the headlines, but we are happy to discuss the details with you. We offer what we call both the direct guarantees, meaning that we can intermediate directly with the borrower, the big logistics companies that require this, or we can intervene through your sureties and local insurance companies, where we then give them capacity, we provide them guarantees or risk participations that enable them to underwrite more of your transit bonds as clients. I had earlier mentioned the country risk and investment guarantee programs that we offer. We also do offer what we call financing to facilitate the emergence of storage facilities and infrastructure, warehousing, and the likes, to enable our companies and our clients to have adequate storage facilities for various goods that need to enter the continental markets. Then as a continent, we do recognize that indeed we are very low, less than 1% of all ships operating within the globally are owned by African ship owners. We have intentionally designed a program to improve the cost of freight on the continent, to improve the shareholding of African shippers in the maritime trade. Therefore, we came up with what we call the Merchant Marine Facility. And this enables us to provide financing to African companies to own vessels and to manage those vessels in improving the sea links between our African countries. Currently, as most of us will know, shipping goods from Kenya to Ghana may involve the goods transshipping in Amsterdam or some other country, because there are no direct links between Kenya and Ghana, for example. Therefore, this facility aims to capacitize our ship owners and shipping companies to own their own vessels and to create direct shipping routes within the continent. Then similarly for fleet financing, this is extended to other modes of transportation. Could be road, could be by air, and we are happy and able to support companies in this regard with fleet financing to renew your fleets or to start a fleet logistics business based on what currently persists on the market. Then generally we offer what we also call the franchise financing, and indeed this is a very important global phenomenon right now. We see lots of companies in South Africa that are seeking to expand into the rest of the continent, and on a franchise basis, we are happy and able to support companies or promoters that requires financing to take franchises, popular franchises, established franchises, African franchises from one country into another. And of course, the same we do for the contract and tool manufacturing. We recognize that most companies these days, the big global multinationals, have moved away from manufacturing. They tend to contract third parties to do the manufacturing. And so we are also able, on the basis of tool contracts or firm contracts from these companies, to offer financing to African manufacturers to set up manufacturing capacity that produces to fulfill some of the contracts that they may have earned from these global multinationals. Then, of course, the same goes for contract agriculture, mainly related to agribusiness and the export trading companies. As part of your backward integration, you are able to go back and to support your farmers with seeds, with fertilizers, with general extension services to guarantee crop yields and to guarantee performance. We are also able to, through these export trading companies, support you with financing to support your value chain processing. So generally, in a nutshell, these are the headlines on some of the financing facilities that we offer. To apply for us, we go through a 3-step process, where essentially the first one, we do the onboarding and KYC. Yeah, very important to us to ensure to know the bona fides of who we're dealing with. We go through a pre-credit assessment process that entails us to have an initial assessment on the transaction, on the basis of which we issue a term sheet. Once that process is completed, we will then proceed to the credit approval and appraisal phase. And where, if it's a corporate finance facility, it's pretty straightforward. It is done internally. We review the environmental social impacts. We review the credit assessments based on the country and the financials of the company, and a credit decision is made. If that is approved, we proceed to our legal documentation phase, which is documented using the Loan Market Association standards, because again, we are a DFI that operates to those standards. We use those standards to document our facilities, and then we are ready to disperse. If it's a project finance transaction, we would usually require the use of technical, financial, and external advisors to assess the financial models, the valuations that have been provided, and on that basis, a credit decision would be made. Again, considering the environmental and social risks, as well as the merits of the credit. So this summarizes essentially how we proceed with corporate and non-corporate transactions and the general requirements that we will need to proceed. Okay.
Thank you very much.
Okay, thank you. So then.
Thank you very much, Mr. Frederick. I think you've given us a menu of products that the Afreximbank has, and where we can tap into. I think there's only one question
is my time up?
So far from. Yes, it's.
Oh, it's up. Wow,
I
didn't know. Okay. Okay, then just give me 2 minutes. Let me just go through quickly some of the facilitation initiatives, just 2 minutes quickly.
Then you 2 minutes and you answer one question that is on the chat. There's a question that said, what has been the uptake of some or any of your products from the East region, and what have been your observations? What is your advice to ensure the uptake is expanded or expanded? Please take your 2 minutes and respond to that question.
Okay,
Mr. Bernard, kindly, Mr. Bernard, please, I can see your hand, but you can send your question on the chat so that we read it through. Thank you very much.
Okay, so thank you. And so just on the trade facilitation, I mentioned the guarantee scheme, which is an important element that we're working on. We do also have what we refer to as the African Quality Assurance Centers. Here we try to, when we're working with start setting the first one in Nigeria, to provide quality testing and assurances on goods that we export as Africans into the global markets. Ghana exports cocoa to Brazil, but it will surprise you that the Brazilians have come to Ghana to set up their own quality assurance center. We need to establish as a continent our own quality assurance centers that give certification to our products that we export to minimize rejection and ensure we fulfill global requirements. Then, of course, the Export Trading Company Initiative, as I said, we are happy and willing to support companies that are already in this business to expand, or new companies that want to become export trading companies. We give you the right setup. We give you the training. You can do it through our Afreximbank Academy. You register. There's an online training program that you can use. And then also we are working with some external consultants to develop this program and train companies on how to set up as an export trading company. The same for how to export. Again, teaching SMEs in particular how to benefit from the Continental Free Trade Area, what the rules of trading are, what the engagements are. Again, you can learn and get more information on this from the Afreximbank Academy. And we are also working with the International Trade Center to ensure that there's training, we train SMEs in this regard. The auto sector is an important one for us. Kenya is one of the automotive hubs on the continent. We are happy to support the development of regional value chains in the auto sector, as well as policy and capacity building in that area for African governments, as well as financing for auto manufacturers that fulfill our direct lending criteria. And again, let me just emphasize that will mean companies that have been in operations for at least 3 years. You have a balance sheet size of at least $2 million, and your annual turnover over these 3 years has been $10 million. This is our risk acceptance criteria for direct lending. Other than that, we have to go through your commercial banks, either through an on-lending program, through your commercial banks, using our SME development program. Of course, the adjustment fund is also available that we can use to support the retooling and the re-equipment of our companies in Africa to support execution and participation under the Continental Free Trade Area. Then, of course, lastly, just our trade fair. Again, a very important platform that brings buyers and sellers together. First one was done in Egypt in 2018. Second one last year in Durban, South Africa. The next one is going to be in Cote d'Ivoire in 2023, November. We invite all of you to be a part of this, because this is where you showcase who you are. This is where you can interact and meet with other companies, buyers and sellers that enable us to know what we offer as a continent and who we can go to trade amongst ourselves. So thank you very much. And then I'll just go quickly to the question. And so yes, a very good uptake in the various markets that we are operating in. We note that as a bank, we are a DFI, therefore we are working a lot through commercial banks. But if for anything at all, our balance sheet size speaks for itself. It tells you how the market is receiving us and the size of transactions that we're doing. Currently nearly $24 billion as of 2022. And so it just tells you the capacity that we have on the market, but we are still growing. We still have the capacity to do more. But importantly, we do not take away commercial banks. Our mandate is to add capacity beyond what commercial banks cannot do. So we do not compete with commercial banks. We capacitate them, give them more capacity, or work with them on deals that the local commercial banks are not able to do. Thank you, Mr. Moderator.
Thank you. Thank you very much. That's great. There's another question from Mr. Bernard. What we are working with companies that may need the facilities that Afreximbank is offering. How can we facilitate them access these facilities? I imagine through supporting their preparation for proposals, etc. Is this a framework you may pursue? Thank you very much. This is a question.
I didn't quite understand the question, but let me hazard a guess. So indeed, we can offer what we call the project preparation financing facility, which is a debt financing facility that we use to support project promoters to bring their concepts and their ideas to bankability. So if you have a project that you need support to engage external consultants, third parties to evaluate your ideas and put together a business plan and a proposal, we're happy to offer you up to $2 million with counterpart funding, of course, from the promoters to bring those or assess those business ideas. That facility is a commercial debt finance facility that will be paid out of the main facility when you do get to bankability. Other than that, if the assessments turn out to be that the project is not viable, then the promoters would have to finance that facility from third-party sources. So yes, we are able to support you. And if you need, in terms of how to engage us, we have an East African office based in Kampala, as I said, that covers the EAC region. You can direct all your requirements to them. Our details are online. You could also directly engage with us following this meeting to the organizers. Our contact details are there. We have also provided them in the chat box. You can also directly engage with us to explore various opportunities. Thank you.
Thank you very much, Mr. Frederick. I can see Vice Chairman Dennis. Thank you.
Yes,
please go ahead.
A quick question for you. Did I hear you right? You're saying you maximum is $2 million for SMEs, and if so, can we carry this message to our SMEs who want to do export across the continent, or can we even go to our private sector organizations to advise players to team up together and create coherent groups that can easily do export trade across the continent?
Okay, so let me clarify. The $2 million, what I said was our criteria for direct lending from the bank is that you must have been in business for 3 years as a company.
Yeah.
You must have a turnover over, that is the aggregate turnover, average turnover over those past 3 years of $10 million. And the size of your balance sheet should be at least $2 million. If you do not meet this criteria, we would classify you as an SME. And as an SME, we will go through our SME lending.
Sorry, can you repeat? Can you repeat?
If you do not meet this direct lending criteria of $10
do
million,
the criteria, please.
The $10 million. Yes, the criteria is that you must have been in business for at least 3 years.
Yeah.
You must have a turnover of $10 million.
Yeah.
And the size of your balance sheet must be at least $2 million. Then we can provide you direct lending as a bank. If you do not meet this criteria, you go through our SME lending program, which is an intermediated lending through your local commercial banks. So what we then do is we engage and provide funding to local commercial banks in your respective country for that commercial bank to then directly lend to you.
So do you operate the same interest rate across? Same as with commercial banks?
So no. Again, as a DFI, we offer a blend of our financing. Is not commercial bank financing rates, but it's not concessional either. So it's a hybrid of the two. It's a hybrid of the two. Yeah, finance charges No, well, you cannot give figures on the basis of without knowing it's country driven, it's client driven, it's transaction driven, and it's based on the general structure that you can assess. But I can assure you, just engage with us. Of course, certainly I can guarantee it's going to be cheaper than commercial banks. But as I said, we do not compete with commercial banks. So we do not.
So when you channel support through a commercial bank, what happens? What rate then governs the transaction?
So again, all things being equal, the commercial bank is an institution that will have better credit rating than the SME that we're dealing with. Therefore, it will be charged based on its financial standing, and then it will then intermediate with a final rate to the SME. But we will be assessing and charging the commercial bank based on its financial standing.
Right. Do you have information on your maximum tenure?
Well, we can offer financing up to 15 years at this point, but we typically have stopped at 7 years, because anything beyond that then has to go through a serious evaluation process and matchmaking process in terms of funding, in terms of costs. But yes, for in exceptional circumstances, we can go up to 15 years.
Okay. Got it.
Thank you very much, Mr. Frederick.
Thank you.
Thank you, Vice Chairman, for those concerns. And I think it's well understood. Before we go to the next presenter, Ms. Matimba Changala, I am noticing that we are losing participants, and I request that we have a group photo, 1 minute, one minute group photo. Then Ms. Changala prepares her slides. And Patrick, please take us through this. Take us through this session of 1 minute of a group photo. Please kindly, all of you, put on your cameras. You can switch on your cameras for a group photo. Then we'll continue with Ms. Changala, if that is agreeable with everyone. Thank you very much. Patrick, this is over to you. Please let us know that we're done or you're beginning. Patrick, can you see everyone?
Yes, kindly smile. I can see all of you. Kindly smile.
Put a beautiful smiles. Thank you.
One more photo. One more. Smile.
Yes.
Yes, thank you very much.
Thank you very much.
Geoff, we can proceed.
Thank you very much, Patrick. Ms. Changala, please, in the interest of time, you have 10 minutes maximum. And I'll be unfair to stop you if you don't stop yourself. Thank you.
Thank you very much, and good morning to everyone. So mine will be very brief. I'm basically going to talk about our Country, Africa and Regional Economic Community Business Councils program. And my full name's Matimba Changala, and I'm in the Intra-African Trade Bank of the Afreximbank. So my colleague has outlined what the bank is all about, so I'll just go straight into what the program is all about and what we're hoping to achieve out of this program. So the Country Africa Regional Economic Business Councils program was developed to facilitate the emergence and institutionalization of business councils, basically to promote trade and investment among African countries. Now, we define this Africa Business Council as basically a national or a subnational or regional body of private businesses established in an African state, or established within a regional economic community, and the whole aim is to drive economic integration through trade and investment. So the premise of this intervention is really to support and encourage business councils within Africa to ensure, exchanges, business exchanges, to unlock investment opportunities, to allow the private sector to develop, to grow as in their respective countries and regions in the whole, and all this is done in the context of the African Continental Free Trade Area. So before undertaking this project, we did a general scoping analysis or research of, what exists in terms of, country Africa or regional economic community, Africa Business Council. So the whole idea is how can we try and ensure that countries within the African continent are trading with the rest of Africa, because this whole initiative is being done under the African Continental Free Trade Area. So we have about 2 that are currently in existence. We've got a Tunisia Africa Business Council and an Egyptian African Businessmen's Association at a country level. So these are business councils that are established to do business with the country and the rest of Africa. I know that there are a lot of business councils in the African continent, but the whole objective of these is to try and ensure that we're trading within the context of the African Continental Free Trade Area, and we're reducing the barriers in terms of how we trade, whether it's regionally or with our neighbors, which is what most African countries do. So the objectives of the program in terms of what we're trying to do, like I mentioned, we're trying to encourage more and more countries to look beyond the traditional way of trading, rather than just your neighbors. Naturally Kenya or Uganda will trade within the East African community, but we want more and more of those countries to now start, we want a Uganda to start trading with a Burkina Faso, with a Tunisia as an example, and that's the whole idea of this program. And to be specific, the objective is really to identify markets and build business relationships and partnerships. We want these councils to be able to foster country businesses and investment linkages. We also wanted to serve as a platform for disseminating trade and investment of information, like we've done today. We also want to be able to tell you about the different products and initiatives that we have at the bank that support trade and investment. It's also aimed at reducing the risk perception among African businesses in dealing with themselves. There's an inherent, there's a general assumption that most African countries will have with dealing with other African countries. So we want it to be easy or comfortable for a Burundi, as an example, to trade with Ghana in West Africa, which is not usually what their traditional trading partners. So we want to be able to deal with that risk perception. And the various programs and projects and products that we have at the bank are also all aimed at reducing this risk perception. My colleague talked about investment guarantees. We have the PUP system, which is also, we also have the Mansa due diligence platform, which also reduces some of the risk associated with trading across the borders. Also, just to highlight, how we are going to meet the objectives of this initiative is, one, we are working with various African countries to establish new country Africa and Reg Africa business councils. What we're holding today is being held under what we have established with the East African Business Council. We call it the East African Trade and Investment Council, and I'll highlight more about that. But also we promote strengthening of country Africa and Reg Business Councils. So the ones that are already in existence, we work with them to try and strengthen them. We've worked a lot with the Egyptian Businessmen's Association and the Tunisia Business Council as an example. Under this program, we also facilitate trade missions to African countries and other outreach programs. We also support, organization of solo exhibition, trade fairs, and also support how these business councils generally participate in the Intra-African Trade Fair that we highlighted earlier. The next one is happening next year in Ivory Coast. We also use these business councils in the intra-African trade fairs, as well as to create cross-country business linkages. So we promote B2B and B2B-G linkages. Just to continue, we also use them as a platform for training. So we have the training program on how to export as an example. So that would also be a platform that we would use to provide training on things like AfTA protocols and other AfCFTA related issues, advocacy on AfCFTA implementation, and also as a platform to identify investment opportunities in African corporates. So for instance, we would organize a trade mission or an investment related event. And as part of that is to identify the specific investment opportunities that can be explored in a particular market. And we do this by working with what we call the African Trade Champions. My colleague mentioned a global facility where we have a network or a pool of African big multinational companies in Africa that generally invest in other African countries. So we match those specific countries to investment opportunities in other African countries. We also use it as a platform to provide finance opportunities. We just highlighted the finance options that we have at the bank. And I'd also, just to reiterate what has been mentioned on the call, is to encourage all of you that are interested in these finance opportunities, investment opportunities, to please indicate in the chat and specify your specific interests, and we'll be able to follow up with the call, with emails, and get in touch with you.
Matumba, you've muted yourself.
Ms. Changala,
Apologies.
you're muted.
Apologies, I didn't realize. Okay, so just to continue, I was saying that we are also providing trade finance opportunities. My colleague highlighted the various finance opportunities that the bank has. We're also working with these African business councils, with other institutions such as the African Business Council and the Pan-African Private Sector Trade and Investment Committee to organize these business councils. So just to give you an example of what we're doing with the East African Business Council, we've established an Africa Trade and Investment Council. We launched it on the 22nd of June in Kigali, Rwanda, at the 22nd annual general meeting of the Eabc. And the whole idea is basically what I've just outlined. It's basically to promote trade and investment and economic integration between the East African community and the rest of Africa. So we, together with the Eabc, under this program, we are currently organizing a Zanzibar Trade and Investment Forum. We plan to have it on the 30th of November as well as on the 2nd of December. So it will be a 2-day forum. We'll have it at the Golden Tulip Hotel, Zanzibar, Tanzania. And the whole idea is we have a theme of promoting sustainable trade and investment under the AfCFTA. So it'll be structured around presentation, panel discussions, B2B and B2G meetings with a mini exhibition. So I'd like to encourage Eabc members that are present on this call to participate. If you're interested in this trade and investment forum, kindly indicate in the chat and we'll be glad to follow up your interest. But also the whole idea of this is to try and have tangible projects that we can promote under this initiative, because at the end of the day, we're trying to promote Africa direct investment, so other African countries investing in Africa. So we will use what I highlighted earlier, our intra-African trade champs, to go and explore opportunities in Zanzibar. Just to continue, the benefits of this program generally include enhanced access to trade, investment and market information. So people who are part of this initiative will benefit from the various business opportunities and investment opportunities across Africa. We'll also enhance the B2B and the B2G relations across Africa. We're also trying to ensure that we are able to pick, tangible intra-African trade and investment deals through effective business matchmaking. So matchmaking is a big part of this whole program. We also want to increase, uptake of the AfCFTA. We want more and more people to understand the protocols and the issues. And just to highlight, as part of this webinar, which we're undertaking as part of the Eabc Africa Trade and Investment Council, we also have the AfCFTA, who will also highlight, give a presentation on where we are as regards the AfCFTA protocols, because this whole initiative is aimed at doing trade and investment under the AfCFTA. The other benefit is that we want to use this platform to increase, utilization of the various facilities, initiatives, and financing opportunities that are available in the bank, but also on the continent. Would like to also use the platform to reduce potential trade disputes between countries through effective consultative mechanisms at the national and regional levels. So we have a number of support and areas of intervention or major strategies for intervention under this program, which include supporting the country Africa REC business councils, as well as linking this program to the various bank products. So the trade fair, as an example, the solo and business councils across Africa, as well as we also use this platform to provide trade and information. My colleague Lizen will come in and talk more about our Africa Trade Gateway or solutions that we ideally work with in trying to promote this program. And Joseph, just to finish off by saying that in this program, we work with a number of partners, strategic partnerships that we work with. So we work with the African Union, the AfCFTA Secretariat, who will be part of this webinar. They'll be making a presentation towards the end. We work with regional economic communities. This event that we're organizing today, we're working with the Eabc. We also have a similar arrangement with the SADC Business Council. We are in talks with the COMESA Business Council on the same initiative as well. We also work with African governments, agencies, trade and investment promotion agencies, definitely the Africa Business Council, as well as PAFTRAC, which is the Pan-African Private Sector Trade and Investment Council, other organized business networks and business associations across Africa. So I'll end there. Thank you very, very much, and hand over to the moderator.
Thank you, Ms. Changala. There are two questions on the chat, but I will answer them after all the presentations. Please note the questions, and you have actually noted them, and we'll bring them to the attention of the panelists. Without further ado, let's have Ms. Lizanne Case, Senior Manager, Trade Intelligence Solutions, to present on trade information, Africa Trade Gateway. Please, Lizanne, 10 minutes maximum.
Sure, no problem. Thank you very much, and thank you for having me here today. I will keep to time. Let me just ensure. Please confirm you can see my screen.
Not yet on my side.
Yes, you can see.
Probably, I don't know
yes,
whether
we can see.
the rest.
Yes, it's visible.
Please go ahead. Please go ahead.
Perfect. So without much delay, I'm here to talk to you about the bank's trade intelligence solutions. So Trade Intelligence Solutions is a division in Afreximbank that was conceived to address the information asymmetry in the continent. We heard my colleagues talk previously about the fact that people in various different African countries don't know about the opportunities in others. And for this reason, trade in both intra and extra regionally tends to be quite low in Africa when you consider the scope and the size of trade in other areas of the world. Europe, it's around almost 60%, Asia's at 51%, and North America is almost 40%. So the low levels of intra-regional trade suggests that there is an opportunity for Africa to deepen its intra-regional trade and use this as a booster for economic development across the continent. The challenge, however, in providing a solution that focuses on trade and market information in Africa is just that. It's the inadequate and non-consistent data on trade, market opportunities, even customs procedures, which tends to increase the cost of doing business in Africa. The trade information asymmetry in Africa is also exacerbated by the fact that, for example, even formal trade data is inconsistently reported. Different countries report in different nomenclatures. There are variations in CIF and FOB, and this tends to make, it increases the opacity of trade and investment opportunities across the continent. Now, when we consider that informal trade, which in some African countries tends to be even greater than formal trade, and this data is also missing, we understand the challenge of really providing a solution around trade and investment information in an African context. So our ambition as Afreximbank is to become the single authoritative hub for all trade and investment related information in the continent. We seek to leverage our core capabilities, which are the bank's expertise. We are a team of trade and investment experts in Africa. We have deep industry and sector knowledge. And as a multilateral finance institution, we also have broad-based membership of African economies. So we have access to key decision makers across the continent and sources of information. So Afreximbank is uniquely placed to deliver these services due to our mandate, our expertise, and our unique composition as an African-focused trade finance institution. In Trade Intelligence Solutions, or TRIN, as we call it internally, our objectives are to provide strategic intelligence and decision support to clients who are either in Africa and looking to expand into other African markets, or foreign investors, foreign traders who are looking to come into the continent for the first time. We also have a dual mandate, unlike my colleagues in the Intra-African Trade Initiative, in that we also support African businesses who are looking for opportunities outside of the continent. Our vision is that we believe insight opens markets and drives trade. Essentially, we have two business models within TRIN. On the one side, we have a digital component, and I will speak to you throughout the course of my presentation about our various different initiatives under this space. We are business owners to 2 of the 5 digital assets under the African Trade Gateway, which, as I mentioned, I will discuss later on in the presentation. We have Trader Intelligence, which is an intelligence platform that is looking to provide insights into African supply chains and connecting users to opportunities. We also have a trader regulations portal, which is looking to harmonize and centralize timely, consistent, and complete African regulatory information. This, of course, is addressing one of the more pervasive challenges in the information aspect, which is on non-tariff barriers, which can sometimes make it even more difficult and exacerbate the challenge of trying to understand the rules and regulations of one market, one African market over another. Now, for those clients who require more nuanced support, we also offer strategic advisory services to companies who have more of an in-depth requirement. So we typically work directly with these large importing and exporting firms, and we help these clients grow their bottom lines and also increase their market share through our various different solutions. So on the digital side, we also have, as I mentioned, I will explain a bit more in depth around the various different platforms, but we also use these digital channels as the avenue to showcase our various different intelligence products. We produce country briefs, sector briefs, currency outlooks, commodity outlooks, trade policy updates, etc. And on the advisory side, we help clients from basic market and industry research to more complicated or complex mandates such as export capacity and growth analysis, new product development. Especially because we're a DFI, we also, and as I mentioned, we have broad-based membership of various different African countries. We also can support business development, twinning, and matchmaking services as well through our consulting services. Now, in terms of our digital assets, trader intelligence is one of our flagship digital assets. And this portal and this platform really is looking to provide detailed information on African trade and investment opportunities by the company, the sector, the market, and the trade flows. A user would be able to identify the best African countries for selected products, uncover intra-African trade flows, and find importers in their selected countries. As I mentioned earlier, we also have our insights, which we provide our various different publications. We also show evidence of the various different case studies of the clients that we have supported. And now critically, it's not only an issue around providing that information, but in Africa, we also have to provide a physical and digital space for buyers and sellers to connect. So within the trader intelligence platform, we also have a B2B marketplace. Sorry. We have a digital marketplace where users are able to showcase their products, their availability, characteristics, prices, and distribution channels as well. On our trader regulations platform, as I mentioned earlier, we are looking to provide complete regulatory information on trade and investment across African countries. So here we are providing all of the regulatory requirements, the legislation, licenses, permits, shipping documents, the tariff and non-tariff barriers. And this is also a critical solution to deliver to the market, because this helps our importers, exporters, and investors understand which markets are more competitive than another. So in terms of our advisory services, we typically work, as I mentioned, with large importers, exporters, and investors. And a typical advisory mandate can last anywhere between 12 to 16 weeks. We typically would do a phased approach in supporting these clients, where in the first phase, we will do a detailed understanding of the company, their assets, their resources, etc. We would also understand their portfolio, whether and basically in the first phase, we're trying to establish what the objectives would be, whether they want to grow via a low risk growth model, so exports only, or if it's an investment mandate where they're looking to actually set up operations in a different African country. This is all, of course, dependent on the particular company, their portfolio, and their strategic objectives. So we would then build a macro model that would help determine a short list of African countries that would be the potential for the company to expand into. Here we'll look at macroeconomic and demographic assessment, and we critically want to not only look at the demand side, but also the ease of entry into these markets, so the supply side as well. And we would be able to determine the attractiveness and the profitability of the particular sector in all of the countries. Usually our clients, once we've, of course, sensitized the model and we are able to present a shortlist, our clients usually select around 3 markets for them to consider. And in the second phase of the assignment, this is where we build the detailed entry strategy for the company. So here we build we're looking at not only the market sizing and the full landscape of the value chain and competitive landscape, is, the prices and even consumer sentiment if it's an FMCG product, but also more critically, the legal and regulatory barriers to entry. And we help the company in the second phase position its market entry and business case for either expansion or investment into those identified countries. So in the third phase of an assignment, this is where, of course, Afreximbank has a competitive advantage over any consulting company in Africa today, in that we also have the relationships. So in the third phase of the assignment, this is where we look to actually deliver some quick wins for our companies that we're working with by holding their hands and helping them implement the strategy that we co-develop. And this could be anything from introducing them to key distributors in an identified market, doing a client roadshow, company roadshow, or even if it's an investment mandate, this could mean, meetings with members of parliament, dependent, of course, on the nature of the assignment. So our objectives as a bank are, of course, to support the clients not only in terms of developing the strategy, but because we're a bank, we also have the financial products and services to help them realize these the implementation side of the strategy. So I mentioned to you about our publications, which we currently produce. We have around 114 publications that we produce annually. This includes our country briefs for all African economies, and the major regions are updated quarterly. We do industry studies for all of the growth industries in Africa, a currency outlook, which we produce quarterly, as well as a commodities outlook, which is also updated quarterly. And our flagship publication is the Africa Insights, where we track cutting edge trade and investment opportunities or anything that's topical in the trade and investment space in Africa. Now, all of these services are going to be offered to companies through our primary gateway, which is the Trader Club. So we are going to be delivering these solutions as part of the benefits of joining our Trader Club. And of course, there are a number of benefits. Our Trader Club is a member-driven network of international businesses and executives who are dedicated to transforming Africa through the vehicles of trade and investment. So, of course, the benefits should be apparent. We help our members explore new markets in Africa. We help connect them to the opportunities. We help manage their operations by accessing the right information and network with key potential partners. Also, we help them keep informed about the latest industry trends that are impacting their businesses. And also we have a team of dedicated trade experts that they can avail any kind of request through and channel any request for more information. So why is the bank doing all of this? I wanted to talk to you very briefly. You've heard about our PAPs, our Mensa, but I wanted to explain briefly. Yes, I know, 5 minutes, 2 minutes. I have only 2 more slides. So this is all because the bank is investing in our African Trade Gateway, which is a digital ecosystem of various different technology products that are looking to unlock trade and investment opportunities in Africa today. So the African Trade Gateway is comprised of the Pan-African Payments and Settlement System, our Mensa Due Diligence Repository, the Trader Intelligence, Trader Regulations, and our African Trade Exchange, which is another B2B hub that is in partnership with the rules of origin from the AfCFTA and UNECA. So let me explain briefly a bit more about the various different products and how they work. So in terms of trader intelligence, we have the trader intelligence, which is providing the information on countries, products, services, prices, and business opportunities. Trader regulations is then providing all of the information around the regulatory aspects of trade. The Mensa Due Diligence Repository helps us embed trust with any unknown entities. So if you've identified a potential business partner through any of our digital assets, you can verify and vet them through our Mensa repository. Of course, you've heard John describe how the Pan-African Payment and Settlement System is facilitating local currency payments across Africa, and that's in and of itself a revolutionary platform. And then, of course, our African Trade Exchange, which is bringing together African buyers and sellers underpinned by the AfCFTA rules. So in terms of how this would work, if a client would start by wanting some information, they would come in through our either the African Trade Exchange or the Trader Intelligence. Once they've determined the market information that they require, they can also then vet and verify, as I mentioned, any potential buyer or supplier or counterparty through our Mansa repository. Our trader intelligence as well as our trader regulations then provide the full remit of information that would be required for them to ensure that this is a viable business opportunity. And then of course, the seller may, once they've identified and found the transaction, our PAPs then would facilitate the payments in local currency. So this is the African Trade Gateway is a revolutionary initiative by Afreximbank, and we're looking to unlock all of our specific pain points for our importing, exporting, and investing clients. Of course, in terms of readiness, this is a huge initiative and huge undertaking by the bank, but we are looking to launch towards the end of this year. Our Trader Club will be launched in December of this year, and the supporting digital assets as well. So before I conclude, I just want to invite everybody on this call today to, we're currently running a promotion and offering a publication called Africa's Growth Hotspots by Industry for 2022. And if you'd like to receive a free copy of this publication, all you have to do is like and follow us on our Twitter and LinkedIn pages, and be sure to send us your email address, and we will send you a copy of this publication. Thank you very much. This is my presentation. I'm available for questions. Thank you.
Thank you, Lisa. Thank you very much. Questions will be sent to the chat. We already have one question there, and we'll flag it to you. Ladies and gentlemen, as you know, all these initiatives, whatever we are doing, whatever we are presenting, can only happen if the AfCFTA is working and is profitable and is meaningful to the private sector in the region and the continent. So allow me to alter the program a little bit. I know we are supposed to have Janice come in, but Janice, you will bear with us. The director of the AfCFTA, Ms. Emily Mburu, has another meeting and she would want to present after you. If you don't mind, please, we are going to switch, and we are going to have Ms. Emily to present, the Director of Trade in Services, Investment, IPR, and Digital Trade at the Africa Continental Free Trade Area Secretariat, to present to us the AfCFTA goals, the status of implementation, and how these tools, Afrexim tools, are going to help in implementation of the agreement. It's Emily, Karib Sana. Please, I know you can be brief because you also have a meeting. Please, let's have your presentation. Thank you.
Okay, thank you very much, Godfrey, and good to see you. It's always a pleasure to be with East African Business Council, and we really appreciate the work that you're doing in East Africa and bringing the business people together and boosting trade in East Africa. And now, of course, we are looking forward to working with you to boost trade in the continent. Mine, as you've heard, I'm Emily Mburu. I'm the Director for Trading Services, Investment, Intellectual Property Rights, and Digital Trade at the AfCFTA Secretariat. I know you have my presentation, Geoffrey. Maybe you can, do you want me to put it up from my side?
It'd be great if you put it up so that you can be able to control it easier and make it fast.
Okay.
Thank you.
Okay, thanks.
Director Emily, did you face a problem? Otherwise, we can present it for you.
Okay, no worries. I was getting technical assistance to make sure that. Thing went wrong. Can you hear me?
Yes, loud and clear, please, Emily. You can
Yes.
you can
Please
proceed.
go ahead.
Okay, all right, it has worked. Okay, great. So I believe it's afternoon already for you. So I'll just go on to look at all the different protocols that we have. That already is an indication of the protocols that we have developed and are developing under the AfCFTA. And maybe just to go on to talk about where we are at. As you are aware, it's in 2012 that it was agreed by our heads of states and government for the AfCFTA to be established as part of the flagship projects of the AFC under the AU as a whole. In 2015, the negotiations to establish the AfCFTA were then launched, and in 2018 in Kigali, Rwanda, in March, we actually signed the agreement. I think maybe my internet is slow because I've already moved, but I'm not sure whether it has moved, but I'll just go on. I think we'll try as much as possible to be fast. And then the agreement itself entered into force on 30th May 2019, and 30 days, which was 30 days after the 22nd state party ratified the agreement. So far, we have 54 countries that have signed. It's only the Republic of Eritrea that have not yet signed. And we have 44 countries that have ratified. And that means that they can now be able then to implement the agreement. Guinea-Bissau is our latest ratification. That was done in September 2022. And oops. Okay. All right. So we have 11 countries, and that is including Eritrea, that now we are looking at. For Eritrea, it is for them to sign and ratify, but then we have 10 countries that we are also following up to ensure that they ratify the agreement. The start of trading, as agreed by the Assembly of Heads of States and Government, was meant to be 1st January 2021. But as you are aware, there were a number of issues that we still needed to work on. And so the start of trading has taken a little longer than we had anticipated. And as you can imagine, when it's now start of trading, it is actually the state parties themselves that are meant to do it. But I'm glad to say that we now have what we are calling the guided trade. And we have a number of East African countries that are part of the guided trade. That is Kenya, Rwanda, and Tanzania. And also Uganda has officially joined the guided trade. Now, maybe then to move on to the phases that we have in terms of negotiating the agreement. We have what we were considering to be phase 1 of the agreement, and phase 1 of the agreement focused on trading goods, trading services, and also on dispute settlement. So we have those 3 protocols that are already done, but we still do have some outstanding issues that we are still working on to completely finalize on those protocols. Then we have 2 protocols. That is the protocol on investment, protocol on intellectual property rights, protocol on competition policy, protocol on digital trade, and one last protocol on women and youth in trade. So work is already underway, and we do hope to be finalizing in the first three protocols, and then we will be requesting for a short extension to be able to finalize the protocol on digital trade and women and youth in trade. On the protocol on trade in goods, according to the modalities that have been agreed for progressive liberalization of tariff and non-tariff barriers to trade, and that is between state parties, of course, it was agreed that the tariff reduction should the first 5 or 10 years, depending on LDCs and non-LDCs, they will then be eliminating or reducing tariff barriers at 90%. So maybe just to say that the 46 provisional schedules of tariff concessions that we have are focused on just that 90%. We are still negotiating then the 7% for sensitive products and the 3% for the excluded list. So the 10%, if I may call it that, that is the 7 plus 3, is still work, outstanding work that we are still undertaking here at the Secretariat in terms of member states providing their offers or schedules of tariff concessions. The protocol on trade in goods does have 9 annexes, and that is the one that will be for the schedules of tariff concessions, the one on rules of origin, customs cooperation and mutual administrative assistance, trade facilitation and tariff barriers to trade, technical barriers to trade, and the sanitary and phytosanitary measures, transit, and trade remedies. So we still have outstanding issues in terms of the schedules of tariff concessions, the rules of origin. I believe the rules of origin, we are still at 86.7, but we are getting there. So countries are still continuing, and the sticky issues are in automotives, textiles and clothing, and also edible oil. So those are the areas where the rules of origin are still under discussion. And I believe those are also key areas that East African community is also very interested in. So I think we should be able to discuss more at the East African community level to ensure that we deal with the issues of rules of origin in those 3 key areas. Then there is still work that we still need to do in terms of the annex or work on trade remedies. So there was a bit of work there that was not finalized that needs to be restarted and taken care of. So as I've mentioned, we have 46 provisional schedules. These are provisionals because they are not yet considered final. They will only be final once we finish on the remaining 10%, that is the 7% on sensitive products and the 3% on the excluded list. Then we have 31 offers that have fully complied, that is in the 90%, with the agreed modalities for AfCFTA tariff negotiations. And those are for ECOWAS, Mauritania, CEMAC, Algeria, DRC, Egypt, Madagascar, Malawi, Mauritius, Seychelles, Tunisia, and Zambia. And also we do have, of course, the East African community. I'm quite surprised we forgot to put East African community there, but we do have the ones for East African community. And that's definitely why we were able to have the guided trade in goods taking off. So I'll not go too deeply into the issues I've already mentioned. You see, even for rules of origin, we have now improved. We are at 88.03. And this just gives you what is there in the remaining work that needs to be done. The same for the protocol on trading goods. And maybe the main thing here to mention, what gave us the room to be able to work using the provisional offers is a ministerial directive that that was adopted and approved by the Assembly in February of 2022. And so in so doing, then we were able to actually start working or trading using the provisional tariff offers under the guided trade initiative. Just to say that the guided trade initiative was launched here in Accra, Ghana on 7th October 2022 by our Council of Ministers. So this is going to be one key initiative that that as the Secretariat, we're going to push to assist countries to be able to trade using the instruments that have been developed under the AfCFTA. Just to mention that currently it's 7 state parties that are part of the guided trade. That's Cameroon, Egypt, Ghana, Kenya, Mauritius, Rwanda, and Tanzania. And I think you can be proud in the East African community to see that 3 of your countries are actually part of the pioneers of guided trade at the AfCFTA. So Tunisia is expected to be joining soon, and also Uganda. Products that have been traded under the guided trade are ceramic tiles, tea, coffee, chicken, beef, pasta, and there are more products. There are actually nearly 100 products that now are under consideration. So this just provides for us the operational instruments that have been already agreed and approved under the AfCFTA in terms of trading goods. We have now the e-tariff book, which can actually be accessed through the AfCFTA website. We have other trading documents such as the origin declaration form, certificate of origin, and also suppliers declaration. We also do have the already developed online mechanism for reporting, eliminating, and monitoring tariff barriers. So then moving on to issues related to trading services, we have the protocol, which, as I mentioned earlier, was part of the phase 1 protocols developed. And this is the protocol aims at progressive liberalization of trade in barriers in trading services. That's the elimination of barriers in the area of trading services. We also are going to have some annexes under trading services. And this is in terms of the schedules of specific commitments, the MFN exemption list for member states, the air transport services consideration. And here we'll work together with the work being done with our colleagues at the AU regarding the development of the single African air transport region at the continental level. Then there is the list of the priority sectors. Those are the priority sectors that were agreed at the starting point for negotiating schedules of specific commitments. And then we do have what we are calling regulatory framework document, whereby we have already developed what we are calling regulatory frameworks elements. And so with that, we are then going to develop the regulatory frameworks in the different services sectors. So we do have 5 priority sectors, and that is transport, business, tourism, financial and communication services sectors. We are working on developing the schedules of specific commitments in those 5 priority sectors first, plus the horizontal section. The horizontal section, basically, we are looking at those barriers or limitations that affect all the different sectors, services sectors in any economy. So these mostly are found in terms of in the immigration, that's for movement of persons, and then also in terms of investment laws at the national level. So that's just to provide an example of where you can find what we call horizontal barriers to trade in services. Then, so we are still working on the schedules and also regulatory frameworks. And for the schedules of specific commitments, just to mention that for the negotiations, we've had 48 offers submitted. This one, why there are 48 is that we have submissions from both state and non-state parties. But of the what we are calling now the draft schedules of specific commitments that comply with the verification exercise undertaken by the Secretariat, we do have now 21 draft schedules of specific commitments that have been adopted by our Council of Ministers. And we have one that is now to be considered at the next Council of Ministers. So with that, we hope that by the end of the year, we will be having 22 schedules of specific commitments, such that by the time our assembly or the summit meet in Niger in November, then they can be able to endorse and fully adopt then the 22 schedules of specific commitments that will be on the table. And here maybe just to mention that the latest, of course, has been the CEMAC schedules of specific commitments that were adopted by our Council of Ministers, I believe it was last week. And the EAC ones were adopted in the Council of Ministers meeting that was held in September. We also have a ministerial directive for the implementation of the schedules of specific commitments by state parties that has been adopted by the ministers. Also, maybe to mention that in the last meeting of ministers that was held early October, it was also agreed and endorsed that we should also start what is being called a guided trade in services initiative. So that will be the work that we shall also now be undertaking so that the services sector can also join the guided trade program. So as I mentioned earlier, we have regulatory frameworks that we are developing. Work has just commenced, let me say it that way, in terms of we now have consultants that are working with us to develop the zero draft or the draft regulatory frameworks for communication and financial services sectors. So part of the work that we are doing is also capacity building. And I believe it's in early November that we shall be undertaking the capacity building and consideration of the key elements that we need to have in terms of the development of the regulatory frameworks in those two areas of financial and communication services. Then there is the protocol on dispute settlement. These are now the three, so the goods, services, and dispute settlement that are part of phase one that have already been finalized. So to facilitate the implementation of the protocol on dispute settlement, we do have some work that has been done in terms of establishment of the appellate body and also the roster for panelists. And really the dispute settlement protocol is expected to provide the administration of the AfCFTA dispute settlement mechanism. And here the process, of course, then will be state to state. So that is, if you have any dispute, you would have to go then to your country to be able to bring then the case under the AfCFTA dispute settlement mechanism. And of course, this is to ensure that the process is secure, transparent, accountable, fair, predictable, and consistent with the AfCFTA agreement. And maybe just to mention that the AfCFTA dispute settlement mechanism does borrow from what we have at the World Trade Organization. So it follows a lot from that, but we have also tried to Africanize it here and there to ensure that we tailor make it to our conditions in Africa. Then moving on to phase 2 protocols, as I mentioned earlier, we are already working on these protocols and 3 protocols. That's the one on investment, competition policy, and intellectual property rights are in advanced stages. And these have also been considered by the different committees that have been established for them. And these committees were established in May of 2021, by our Council of Ministers. And I can confidently say that at least for these protocols, we are at the last stage, and we do hope actually that they will be adopted by the Council of Ministers meeting, which is meant to sit in Gabon, Libreville, Gabon, at the end of this month, that is just next week, actually 27, 28, to adopt these protocols. And then, of course, after that, we will still have work in terms of legal scrubbing, and legal scrubbing is usually done through our African Union systems, that is through the Specialized Technical Committee on Legal Affairs and Justice, and then through the Permanent Representative Committee and the Executive Council. So just to mention quickly what is contained in the different protocols, the ones that we have already finalized to some extent. So we have the draft protocol on investment, and it looks at issues related to investment promotion and facilitation, protection of investors, investor obligations, sustainable development, and also sustainable development related issues. We have institutional framework, and maybe an interesting element to mention under our institutional framework is what we call the Pan-African Trade and Investment Agency, PATIPA. And under this, we are working closely with our colleagues from Afreximbank, and we've had our colleague Gainmore actually making presentations to the committee until they agreed to actually have PATIPA. So there we would also want to say thank you to Gainmore for that good work to assist us with ensuring that the Pan-African Trade and Investment Agency is part of the protocol and that means that once adopted by the Assembly of Heads of States and Government, then it will be ready for us to operationalize. And really the essence is that it will be the agency that will assist us to promote not only investments, but also trade in terms of working closely with the export promotion agencies in the different countries, and also investment promotion agencies. Then we also have a chapter that deals with dispute settlement, and here it does cover amicable solutions, dispute prevention and grievance management, state-to-state dispute settlement, which will then be handled definitely under our the AfCFTA dispute settlement mechanism. And then we have put in a consent-based investor state dispute settlement arbitration process. But maybe just to mention, so that if anything happens, you don't say we had already said it is cast in stone. The element of the consent-based ISDS arbitration is still under contention. And so it is one of the issues that the ministers will be considering next week, whether to adopt it or not. So it is still hanging on the balance as to if we will actually have that element of consent-based ISDS arbitration. So on the moving on then to the protocol on IPR, the protocol does look at different key issues. And maybe just to say that what we have done with the protocol on IPR is actually just to come up with a framework protocol. We can call it a framework protocol. And then we've put in a built-in agenda to then negotiate the different annexes that handle the different areas of IPR. And this is and those are just a mention of the different annexes that we are going to have. One on plant variety protection, geographical indication, trademarks, patents, utility models, copyright. So all the different types of intellectual property and rights that need to be protected are going to be under the annexes. The only other major thing that we also have in the framework protocol is an issue to establish an agency or an IPR office at the continental level that will be looking at and focusing on issues related to intellectual property rights. So what that also is one of the contentious issues under IPR that we are taking to the Council of Ministers next week on if we should actually have an IPR office or an IP office under the AfCFTA protocol. So that is also a contentious issue that we will deal with next week. Then there is the draft protocol on competition policy. And this one is looking more at, of course, then handling issues of anti-competitive business practices and conduct. There is an element of the establishment also of AfCFTA competition authority that will administer and enforce the provisions of the protocol. And then the establishment of AfCFTA competition tribunal or court. So that will be responsible for the appeals against decisions that have been taken by the authority. And that is, of course, related to the implementation of the relevant provisions of the protocol on competition policy. So this is just also to mention that there are a number of contentious issues that we are taking to the minister. One of them relates to the establishment of competition authority. As you're aware, we do have a number of regional economic communities that already have competition authorities. So the key issue here is what is going to be the relationship between the regional competition authorities and the continental one. So that is also one of the key issues we are looking at next week. Also the issue of the competition tribunal. Is it going to be a tribunal or is it going to be a court? So that is also an element that we need our ministers to discuss and deal with next week. Then the two protocols, as I mentioned earlier, the protocol on digital trade and protocol on women and youth in trade are work in progress. So we have the committees have already been established, and under both protocols, we've had engagements to have what we were calling regional consultative meetings to actually discuss with different stakeholders and then get what are the key issues that needs to be part of the protocol. So those have already been determined. And if we look at the protocol on digital trade, we have the committee established. We've had the regional stakeholder consultation. We've had brainstorming sessions. We've also already developed the terms of reference for the committee, the key elements that are going to be considered under the protocol. And we've also established what we are calling an ad hoc task force on digital trade. So that is the work that we have already started on. And we are hoping to have before the end of the year, the first meeting of the committee to consider their terms of reference and also the guidance note and key elements for the protocol. Also, maybe to mention that we have also worked on a situational analysis document, which is near final, and we also hope to have a workshop or a capacity building session back to back with the meeting of the committee to consider the situational analysis study. On our protocol on women and youth in trade, this is also work in progress. And also just to say that the committee has been established and working together with different stakeholders, the UNDP, UN Women. We have 26, we had 26 national consultations on women and youth in trade. And we also have, in some of the countries, they have established national consultative committees to deal with the issue of women and youth in trade. So a number of brainstorming sessions have also been held. If you recall, during the Intra-African Trade Fair that was held in Durban last year, the AfCFTA did have a number of sessions on women in trade, women and youth in trade, and also I believe there was a panel or 2 sessions that dealt with women and youth in trade. So the protocol is also a work in progress. And as you are aware, last month in September, we had what we are now considering under the AfCFTA as annual women and youth in trade conferences. And the first conference was done in Dar es Salaam, Tanzania, last month, which was quite successful. So I think I'll stop there to take any questions. I know it was a bit longer than I had also hoped, but we'll take any question. And my colleague, Dr. Chidede Tokmo, is with me, and so he can also take up some of the questions that are online. Thank you very much. Over to you.
Thank you very much.
Moderator.
Thank you very much, Emily. Thank you so much, Director Emily. I can see my seniors' hands are up. I'll probably start with JB.
Yeah, thank you very much, moderator. And yeah, thank you very much, Geoffrey. And I want to thank Dr. Emily for excellent presentation. As usual, you are very elaborate and articulate, especially given your good background in trade and trade negotiation. So my question is these instruments need to be domesticated. They need to be understood by the private sector. So, and I want to appreciate Afrexim because Afrexim already realized that they cannot move further without engaging lake business councils. That's why my board, my AGM endorsed Eabc to work with Afreximbak. So I was wondering at the CFTA Secretariat, how do you really roll out these instruments so that they are domesticated, they are owned by the private sector? So that is my first question, because all these are known to your policymaker ministers, but they don't trade. Trading happens by the private sector. We are the owner of the factor of production. So I need to know how the Secretariat is working on that. The second question is on private sector development strategy. I remember when we had a REX meeting in Arusha, Tanzania, the Secretariat did mention that they have already developed a private sector implementation strategy so that the private sector becomes the driver of the CFTA, because when you look at the CFTA, all these protocols you've mentioned, they hinge on the ability by private sector to trade, take this opportunity of the wider market. But we've realized that all these instruments are owned by government institutions. Even the selection, guided trade was with REX, no one understood the selection criteria for countries to be chosen to be piloted. I remember in that meeting, I had someone in Kigali, and my vice chair is here. When someone said, why Uganda is not selected? Why is Rwanda? Why is the URT? Why is Burundi not selected? What did he see, or what do you do to ensure that we are remain? So we need to have a way to disseminate information. Trade information is has been very scarce. Again, with the Secretariat, Dr. Emily, and I think that is the message you need to convey to the to the Secretary General, His Excellency, that we need to engage the REC Business Council, and we need even to see how we institutionalize African Business Council. As I said, Afreximbank is taking a proactive role, and we have an engagement, a very solid engagement. So we want to see also the Secretariat coming down, not just sitting in Ghana to give us all these good ideas, good instruments, but to be fully engaged. So my last submission, again, to thank the team for really making a very good effort. That you did mention about the issue of rules of origin, and we always say the rules of origin is a passport for goods. Once you don't have that passport, you cannot trade. And I realize that we have not attained 100%. I'm wondering, even if a country is selected, when the rules have not already agreed upon, if we will be able to achieve our objective. And that also relates to the same question on standards. The progress, if I recall well, the progress on standard harmonization is still at 13%. And how do you trade? Even now, I mean, the meeting with standards bodies, they don't understand how they are going to trade under CFTA when the standards are not harmonized. They say, no, how do we export to Ghana our coffee? What is the African standards? Yeah? Do we have our own standard, or we need to use international standards? So those are a few reflections. Otherwise, I want to thank you, Emily, for your excellent presentation as usual. Thank you very much.
Yes, Mr. Chairman, please.
Yes, thank you. Thank you, moderator. And Emily, I want to echo the words of our Executive Director, JB, and thank you too for the excellent presentation you have given. In fact, I don't have questions as such. I'm more or less answering JB's questions, but also suggesting tasks for you, Emily, out of your presentation, in terms of how I look at things and how implementation is going to come down from Accra, CFTA headquarters, to come down to be broken down to the regional business councils. Emily, I met your boss last week, and we had an interesting conversation. And one of it was that we get in touch with you directly. I did not know you are in place, incidentally. Apologies for my ignorance. But the Secretary General, we had a meeting last week here in Kigali. And one of the things you agreed is that Eabc immediately gets in touch with you, and we work with you day and night. We'll probably spare your nights, and move on the same page, because he realized we are doing quite well, and we are focused in terms of implementing everything that you are discussing in Accra. Now, a couple of things that we touched on is there are all those aspects that JB has mentioned on standards, on the protocols that have been signed, on those that are still under negotiation, on the pertinent issues that are being discussed, still being discussed in different countries. What I think should be done, and this is our role here as private sector, what we need to do is to have regular engagement with your office on almost a weekly basis, and have all these protocols documented into one simplified document, which we then bring down to our, say, Eabc, to our regional economic blocks. Then we gather members of the private sector, we gather them, we disseminate the information as to how far this whole exercise has reached. We explain protocols signed, we explain protocols in progress, we explain everything about intellectual property, about competition. I think the only And best mechanism to do it is through using us as business councils. Business councils represent the private sector directly. So we need to be in touch with you. And so we are in touch with the people down there. And occasionally, you come down to the business councils, you come down to the region. If we are properly organized, I'll come to that in the next point. If we are properly organized across the continent, you come and visit us at an agreed location within the region. Then we invite key regional either players or board members or a mix of the two, and then we distill the document properly for easy consumption of our communities when we go back. Because otherwise,